Yes, now we'll be seeing essay 570 which deals with going concern. Now if you see, the going concern assumption has to be made by the management before preparing the financial statements. It has to make an assessment of whether the entity will be able to continue as a going concern or not. Going concern means entity should be able to pay off its liabilities in the foreseeable future. See, let us see the definition. Assumption that entity will be able to continue its business for foreseeable future. And who is responsible for making this going concern assumption? Obviously management is responsible. After management has made the going concern assessment, auditor, he will evaluate whether the going concern as a going concern assessment made by the management is reasonable or not. Okay, that will be evaluated by the auditor. Next, so it is the responsibility of management. Now, objectives of auditor. What are the objectives of auditor as per this essay 570? To obtain sufficient appropriate audit evidence regarding appropriateness of management's use of going concern. Okay, just now I have told you this point. Next, assess whether material uncertainty exists related to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. Okay, what are these material uncertainty events or conditions? We will see. There are three types of such conditions. Okay, one is financial, operational, and other. We'll also see some of the examples for these conditions. See, events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. They can be bifurcated into three. Firstly, financial events, operating events, and other events. Now coming to the financial events, some of the examples of financial events. If you see, net liability position, the liabilities of the entity is more than the assets, then this will create a material uncertainty of the entity's ability to continue as a going concern. Okay, this is one of the event or condition that may indicate that entity may not be able to continue as a going concern. Just like that, fixed term borrowings approaching maturity without realistic prospectus of renewal. Okay, borrowings are approaching maturity and there is no possibility for renewal, or withdrawal of financial support by creditors. Creditors are not giving stock on credit basis. Negative operating cash flow. Operating cash flow is negative. Substantial operating losses. Adverse key financial ratios. Arrears or discontinuance of dividends. All these are some of the examples of events or transactions that may indicate entities that may indicate material uncertainty about entity's ability to continue as a going concern. Next, moving to operational events. Okay, still there is one more example, inability to pay creditors on due dates. Next, moving to operating events. Now, management's intention to liquidate the entity. Okay, management itself wanted to liquidate the entity, or loss of key management without replacement. Labor difficulties. If you see in these events, no finance is involved. It is not related to monetary, it is related to operating activities. Next, loss of major markets, key customers, franchise license or principal supplier, shortage of important supplies. All these are some of the examples for operating events. See, emergence of highly successful competitor. Next, other events. Non-compliance with other statutory or regulatory requirements, pending legal or regulatory proceedings against the entity, change in law, regulation or government policy, uninsured or underinsured catastrophes when they occur. If you see here in this, they are not related to operational or administrative activities of the entity, nor they are related to financial activities. These will come under other events that may cause significant doubt or material uncertainty on the entity's ability to continue as a going concern. Next, evaluating management's assessment of going concern. Now, in the first slide itself, we have discussed that it is a responsibility of the management to assess whether entity can continue as a going concern or not. After that, auditor has to evaluate the assessment that is made by the management. Now, how the auditor will evaluate? Let us see. determine whether management has already performed preliminary assessment of entity's ability to continue as a going concern. Okay, you have to determine whether management has actually performed its assessment or not. If management has performed, okay, if yes, discuss management's assessment and whether management has identified any conditions that may cast significant doubt on the entity's ability to continue as a going concern. Okay, you have to discuss with the management how they have conducted their assessment, and during their assessment whether they have found any events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. If no, if management has not performed any such assessment, then discuss management's basis for intended use of going concern basis of accounting. Okay, management saying they have not performed going concern assessment, but they have prepared the financial statements as per going concern. So what is the basis for their going concern basis of accounting? You should ask this with the management. Next, if management's assessment covers less than 12 months from the date of financial statements, auditor shall request management to extend its assessment for a period at least 12 months. See, management has to verify going concern assumption of the entity for a period of at least 12 months from the date of financial statements. Okay, if management has covered less than 12 months, then auditor should ask the management to cover its going concern assessment for at least 12 months. Okay, next, consider whether management's assessment includes all relevant information of which auditor is aware as a result of audit. Okay, whether management has considered all the information that the auditor has known with respect to going concern assessment. Next, inquire of management as to its knowledge of events or conditions beyond the period of management's assessment that may cast significant doubt on entity's ability to continue as a going concern. Now, management has made assessment of going concern up to certain period, let's say 12 months or 24 months. Now, you should also ask management whether management is having idea of any events or conditions that may occur after the period considered by the management, which may cast significant doubt on the entity's ability to continue as a going concern. Okay. Next, audit procedure when events or conditions are identified. See, if any of the events or conditions that may cast significant doubt on entity's ability to continue as a going concern is identified, then auditor shall, where management has not yet made an assessment of entity's ability to continue as a going concern, request management to make its assessment first. Okay, if auditor identifies any events or condition, he will ask the management, have you made your assessment? If management says no, we have not yet made the assessment, then auditor will say, you first of all make assessment of going concern from your side, then evaluate management's plans for future action. Now, what is the management plan for future action? Let's say the borrowings are approaching maturity and there is no possibility for renewal of borrowing. Now, in this situation, what is the future plan of action? How management will get money for their business? Management is planning to invest its own money. So this is its future plan of action. So auditor should discuss this future plan of action with the management to overcome these material uncertainty. Next, analyzing the cash flow forecast of the entity. Any additional facts or information have become available, and requesting written representation from management and those charged with governance regarding their plans for future actions and their feasibility of these plans. Okay, here management has told that they are going to take certain actions, certain future actions. So auditor should ask for a written representation of those future plan of actions along with their feasibility. Okay. Next, coming to the final part, that is reporting in case of going concern. See, audit reporting. If use of going concern assumption is appropriate, okay, management has used going concern basis of assumption for preparing its financial statements, and such use of going concern assumption is appropriate, but a material uncertainty exists. If a material uncertainty is existed and use of going concern assumption is appropriate, then management has to disclose this in its financial statements properly. See, if adequate disclosure of material uncertainty is made in the financial statements, then auditor can give unmodified opinion with material uncertainty related to going concern paragraph. Okay, by including this material uncertainty related to going concern paragraph in the audit report, auditor can give unmodified opinion. In SA 700, while discussing the format of audit report, we have seen about material uncertainty related to going concern paragraph, which will be given as per SA 570. Right. Now, if management has not given adequate disclosure, see, adequate disclosure of material uncertainty is not made in the financial statements. In such a situation, what the auditor will do? Auditor will qualify or give adverse opinion based on pervasiveness of the misstatement. Okay. Next, use of going concern base of accounting is inappropriate. See, management should not use going concern base of accounting, but it has used going concern base of accounting. In such a situation, auditor will give adverse opinion because audit evidence is available and the misstatement is material. Okay, not using the going concern base of going concern basis of accounting appropriately, and it is also pervasive because it is affecting entire financial statements. So auditor will give adverse opinion. Next, if management is unwilling to make the assessment, okay, management is not willing to make the assessment, then auditor should consider the impact on his opinion. Okay, whether he has to give modified opinion, whether he has to give unmodified opinion, what is the impact of opinion that he needs to consider. Okay, so by this the revision of SA 570 gets completed.